Ladies and gentlemen, good day and welcome to the Cohance Lifesciences Limited update conference call on the change in directors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Cinderella Carvalho, Head of Investor Relations. Thank you, and over to you, ma'am.
Good evening, everyone. Thank you for joining us on a short notice. As you would have seen our stock exchange communication, this call is regarding the update on our Managing Director's resignation. Today we have with us our Executive Chairman, Mr. Vivek Sharma, and our Chief Financial Officer, Mr. Himanshu Agarwal. With that, I'll hand it over to Mr. Vivek. Vivek, over to you.
Thank you, Cinderella, and good evening, everyone. I would like to share an important leadership update effective immediately. Dr. Prasada Raju will be stepping down from his role as Managing Director of Cohance. Dr. Prasada Raju has resigned from his position considering his personal priorities and to continue his learning journey. Prasada will remain associated with the company to orderly transition for an extended period ending this fiscal. The board has placed on record deep appreciation for his invaluable contributions, leadership, and commitment in steering the company through its growth and transformation journey. In light of this development, the board has approved a revised organizational structure, one that better reflects our multi-business portfolio and expanding global footprint, and positions Cohance strongly on its path towards the $1 billion US vision. This new structure is designed to bring greater agility, faster execution, and deeper accountability across our businesses. With this in view, we are realigning our organization structure to strengthen focus and accelerate decision-making. As you are aware, over the past year, we have established 3 distinct business verticals, each led by a highly experienced and accomplished industry leader who bring deep expertise and proven track records in their respective domains. These business unit leaders have fully operational ownership and accountability, will henceforth report directly to me. We will also be welcoming a platform COO shortly, a seasoned industry leader who will be based out of Hyderabad. A techno-commercial professional with over 3 decades of experience, he brings a strong blend of operational excellence and on-the-ground project execution. Our new COO will further strengthen our technology and operations backbone across the organization. Additionally, I am pleased to share our CFO, Mr. Himanshu Agarwal, will be joining the company's board as director, ensuring continuity and alignment across leadership and governance levels. You are all aware of our leadership structure, but let me take a moment to reintroduce our key business leaders whose key responsibilities areas are fully aligned with our vision and the next phase of Cohance's growth. Mr. Yan Harve, Pharma CDMO. Yan is based out of Pennsylvania, brings over 3 decades of global experience across pharma and specialty chemicals, including more than 15 years in the CDMO space. Yan's deep understanding of drug substance, CDMO, high-potent APIs, and complex chemistries position him to scale our CDMO and niche technology franchise globally, drive customer-centric partnerships, and embed operational excellence as a core differentiator. Mr. Gunjan Singh for API plus business. Gunjan, based in Hyderabad, brings extensive leadership experience across top Indian pharma companies, combining strategic portfolio management with strong commercial and operational acumen. Gunjan's focus is to expand our differentiated API portfolio, improve portfolio productivity, and strengthen customer engagement across regulated markets. Mr. Amrit Singh, Specialty Chemical Business. Amrit has close to 2 decades of experience across leading Indian specialty chemical corporates with a strong track record in instilling new business and managing global customers. Amrit's priority will be to accelerate growth in agro and performance chemicals space, leverage our technology integration, and enhance international partnership to build a sustainable specialty platform. This revised organization structure will enable us to deliver on our vision through a value of customer first, accountable, empowered, trustworthy, and sustainable. Our two business unit leaders, along with their commercial teams, are participating at CPHI Frankfurt right now, meeting with global customers and partners to strengthen strategic relationships and explore new collaboration opportunities for Cohance. We have unveiled our new brand identity at CPHI Frankfurt event, reinforcing our positioning as an integrated global CDMO with deep technology platform. To sum up, this transition further accelerates our positioning of Cohance as global platform with three engines of growth, with three strong leaders for each business unit that will help drive growth and a vision for $1 billion by 2030. Thank you, Sundar.
Thank you, Vivek. That concludes our formal remarks. I would like to remind everyone that we are currently in our silent period ahead of our Q2 earnings, and hence we will not be able to take or comment on any quarter-specific or financial number-related questions today. We'll now open the floor for questions from participants.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. We have a question from the line of Chirag Dagli from DSP Asset Managers. Please go ahead.
Yes, good evening. Sir, can you spend some time on, how are you managing this transition insofar as client interface, etc. is concerned? If you can spend some time on that. Of course, you must have spoken to clients. What is the initial feedback around this whole transition?
So I think, Chirag, thank you for the question. Our businesses and business CEOs, they directly work with the clients and they're managing clients, and they're all at CPHI right now, right, dealing with clients. And between the commercial team and the business CEOs, there is very good connectivity with the clients. And there is no single dependency on Dr. Prasada on any specific client. All these relationships were already transferred as part of normal transition to the business CEOs. However, Mr. Prasada, as part of transition, will be with us for the next few months. And in that period, he will attend key important meetings and work on transition, wherever the relationship transition is required. Or if there's any key customer meeting, he will join that to make sure that the handover properly happens. This just happened a little bit ago, so we have not broadly communicated, except for the communication you just see on the stock exchange. We have not gone out to customers. We will be through these meetings at CPHI communicating. Actually, we just communicated to our team a few minutes ago. We are now communicating to our team. So we'll be telling our customers who are participating at CPHI through that process. And then, as needed, we will communicate in other forums. But otherwise, we'll be one-on-one meetings during the CPHI. We will be communicating about them.
Understood. And just, broadly speaking, of course, this company is changing a lot. And clients are, it is expected when 6 entities become one to see some bit of churn. But when do you think, a lot of this churn kind of normalizes and things start to, find some base in terms of attrition or, churn within employees?
Yeah, Chirag, so listen, you are right. There are 6 companies coming into one, right? It's a platform. Our hope is that we don't end at 6, we keep adding more, and we're looking aggressively to add more. Some of this, listen, I think is natural. However, with the Cohance and Suven merger earlier this year, I think what we see are some changes that in my view are big in nature. However, with the verticals that we have, with the new CEOs, with the new COO coming, we have few other key talent, actually senior people that will be joining us in the next month. I expect at the senior level we are reaching that phase of stabilization, now. Now, as we continue to expand, as we have just hired a Chief Operating Officer for the CDMO business, who joined us about 3 weeks ago. As we continue to expand and as we continue, there might be changes and upgrades that you might see at different positions. But at the senior level, my hope is that we are reaching that point of stabilization right now.
Understood. Sorry, I joined a little late. I don't know if you've covered this, but are we already looking for a replacement? Have you finalized? When do you think we can hear from getting a new CEO?
Yeah. Chirag, we did talk about it, that we have changed the structure from what it was before. The new structure will have 3 new business CEOs who were actually in the system before. They will all directly report to me. We are, however, creating a new position of platform COO, who will be joining us shortly, hopefully in the next few weeks, and he will also report to me, so that the operations dotted line also report to him in addition to supply chain quality, but the businesses will have complete autonomy and they will report it to me. The structure will be slightly different from what it was before.
Understood. Okay, sir. Thank you so much.
Thank you. Ladies and gentlemen, if you wish to ask questions, you may please press star and 1. To ask a question, ladies and gentlemen, you may press star and 1 on your touchtone telephones.
Maybe while we're waiting for more questions, I can just give a brief update on the that you may find helpful. This is given, as you know, that we are in quiet periods, we cannot share any numbers. But just general update, we've recently completed 4 major customer audits across our CDMO facilities, and they all went very successful. Our RFP pipelines, which, with the addition of a BD team and all these investments we've been making in commercial infrastructure, is becoming more and more robust. Pharma is taking time to make decisions, but we are excited with the pipeline, with the relationships we are working, with our engagement with customers at different fronts. One of our large Japanese customers has confirmed its phase 3 order, which is very important for us. This is a very important milestone in our CDMO journey. Our Suryapet facility is scheduled to be capitalized in line with this confirmed order, which reinforce our readiness for commercial scale execution. This is one of the 4 phase 3 commercialization products that we were expecting, so we're pretty excited about it. In addition, our recently onboarded large innovator customer relationship is progressing very well, with multiple mid-phase projects under active discussion, and their leadership team is actually expected to visit us shortly. Our ADC business continues to gain traction with wins and alternative payload program, and steady progress across both existing and new partnerships, supported by our NJ Bio team in the US. Surya, our oligonucleotide unit has successfully completed equipment validation and remains on track for commissioning in Q4, marking another important milestone in expanding our advanced therapy capabilities. This is the site in Nacharam in Hyderabad, which just got completed, and we're working on the validation process. Now, on the recent OAI classification of our Nacharam FDF unit, which we updated to the stock exchange last week, we are in the process of appointing a leading US FDA consulting firm to also help us, in addition to an Indian firm, guide us through the remediation process. We're working proactively with external experts to address observations and engage with the agency in the best possible manner. However, as we have said in the past, business is less than 1% of the overall impact even that we have. However, we're giving it all the due importance and continue to work with making sure that we address everything in the right way.
Thank you. So we have a new entrant to the question queue. We have Shyam Srinivasan from Goldman Sachs with the next question. Please go ahead.
Yeah, thank you for taking my question. Just the first question on the change. Do you expect any large change in strategy following some of the recent changes, Dr. Prasada, before that, Dr. Sudhir? So anything that is changing, or you think, like you said, maybe just as two platforms come together, there are going to be personal changes? Are we going to pivot into something different, or is there a thought process to change the execution strategy?
So, Shyam, if there's a change, it is to expedite actually our growth journey and to bring more execution and to accelerate everything that we are doing. But fundamentally, our vision of $1 billion business by 2030 remains there. We are committed to reach there. And as part of that, we're bringing in more global leaders, more talent that can help us reach there faster and improve our chances of reaching there. But fundamentally, no, there is no change in our strategy. We remain committed to $1 billion business with significant portion coming from CDMO with focus on tech-driven businesses. However, as part of progression, it's important to bring in leaders that can help us reach there faster and better. And that's why you are seeing a lot of new additions to the team. We've added key business CEOs. All of them have joined us in the last 6-7 months. We're adding a COO position. We're bringing in some of the functional expertise. Commercial team has strengthened significantly and a very different level of commercial team that I'm excited. So to answer your question, there's no change. All our efforts are to accelerate and make sure that to ensure that we reach that path.
Thank you, sir. The second question on industry development, the US Biosecure Act has been cleared by the Senate. So what are you, is this is much delayed, right? This was started in December last year at the House. So anything that you're picking up now from the conversations that you're having with customers on, or is this legislative change going to be more lasting in terms of its impact?
Yeah, Shyam, as you know, this has been going on for the last, 6-7 months or 9 months now, right? And we have seen ups and downs. My answer is going to remain consistent what I've been saying. Listen, people are moving towards figuring out a China-free strategy. I think that trend, irrespective of biosecure, I think companies are fine. However, the pace at which they move depends on company to company. Indian companies will definitely continue to benefit. Now, the act, as you know, is still being reviewed and it's not fully passed, but it's a step in the right direction. Now, with some changes, right? They took some of the names of the companies. They made some modifications to the original version. That will definitely have impact. But overall, this is a positive sign, in my view, for India and India CDMO and CRO industry.
Thank you, sir. All the best.
Thank you.
Thank you, sir.
Participants who wish to ask questions may press star and 1 at this time. Our next question comes from the line of Naresh Suthar from SBI Life Insurance. Please go ahead.
Yeah, thank you for taking my question. Question is regarding, has there been any attrition in plant operation senior level as well as in the R&D team as well in last 2-3 months?
Naresh, your line was not very clear, but can you repeat the question just to make sure I'm getting the question?
So what I'm asking is,
senior level and R&D, right? That's the question. Is there any senior level attrition and the attrition in R&D, right?
Yeah.
Let me answer that, yeah. So there will be, yeah. So let me, so this is CDMO R&D. That is, put on mute, I think maybe you can, there's a lot of noise, right? Okay. So, we have a new head of R&D for the CDMO business. We actually have two senior guys who joined us in the last 1 year. They've taken over as the head of R&D, Dr. Somesh and Dr. Ashok. Both were in the system, and they are now running the R&D, including the ADCPs for the business. On R&D part, we've also added the ABC segment with NJ Bio expansion. We have not seen, except for one or two changes at the top. Apart from that, below that, we are actually expanding, and we've added a lot of R&D resources in the company. So while there were some people that left few months ago, that got replaced right away. There is actually more addition to the people, and now with the oligo site coming up, we are adding a lot more talent and a lot more people. We have won some new contracts in ABC, in Nacharam, and we are adding people for talent for that as well. So there is actually growth in the R&D overall in our R&D workforce.
Okay. My this reference was whether because of this attrition, is the workflow with the clients or the communication with the clients has been impacted or this is smooth?
So Varesh, if I understand, your line is unfortunately very bad, but if I understand, is there any impact on the workflow with the client? So no, our delivery OTIF on R&D remains at 100%. We are very, very, very good in delivering our R&D projects. We have actually had success in winning some larger projects with the new team in R&D. Actually, our head of R&D in the CDMO was in Europe. They are actually at CPHI. He was in Europe meeting with our key customers last week. So we have seen, if anything, we have seen all positive improvements, and we just working on the launching the oligo site, which is also part of R&D. We have won a large contract with a large CDMO for ADCs. That is also a result of our R&D capabilities. So if anything, Varesh, we are seeing a lot of positive momentum.
Okay. Thank you.
Thank you. Our next question comes from the line of Karthikeyan from Suyash Advisors. Please go ahead.
Yeah. Good evening, Mr. Vivek. Thanks for the opportunity. Just want to understand from a cultural perspective, how do you view the attrition that has been observed in the recent past? As outsiders, it is for us a bit more, shall we say, disturbing because this is very senior level exit. So how do you A, view this? Is there a cultural element that you would want to call out? And B, how do you ensure that this doesn't become a recurring feature? Joiners and leavers being a recurring feature kind of a thing. Or do you believe that we should get used to this as a normal thing?
So I think this is culturally, we actually are a very unique organization. Somebody started saying we are a combination of 6 family-owned businesses that have now become part of who we are today, right? So there has been a cultural transformation in the company, in the journey, and for us to really realize the billion-dollar ambition, we'll have to continue to evolve in our journey. As we are becoming more global in nature, as we are becoming more integrated in nature, as we are moving up the value chain, our culture has to keep evolving and keep moving up for us to deliver that ambition that we have for our shareholders, for our customers, for our employees, right? So that journey will continue. These were all different nature of businesses in different places. Now they're all part of global company. And there is definitely a transition in culture, and you will see that natural transition in culture. However, the common thing that binds us is our values, is our ecosystem, is our performance system, is our culture. For example, we just had a call with all our leaders to communicate about Dr. Prasada, that leaders from all different parts of the different businesses globally, because they're all part of the business. Tomorrow we are having a global town hall with every single employee in the company is being invited to that. So we are very open, we are very transparent, we are very collaborative. We share with them jointly with Dr. Prasada on these calls as to why he's leaving, and what is, how the company will continue to work, right? So to me, that is also cultural transformation, that we are really bringing in transparency, openness, and opportunity. Cultural transformation also, somebody asked a question about the head of R&D. We are building talent internally in the company that can move up. So the replacement of the head of R&D has happened actually with internal upliftment, internal moving up. And we are working strongly to build that pipeline, that as we grow and as we evolve, that we have internal leaders who are really can move up rather than we keep hiring people from outside. The third, which I really want all of you to focus on, is the amount of talent we have added. It is true that some people have left for different reasons. However, as we aspire to really reach $1 billion vision, as we work on our commitment to deliver something aggressive, we need people with that experience, with more global experience, with people who have been there, done that, who are bringing in different relationships, different technology expertise, and a different vision. And while some people may have left, but I can tell you we have hired and added a lot more talent than the people that have left. Right? So yes, there has been some churn, but some of this was designed, some of this is timely, people have decided for personal reasons. But I'm actually excited with the new leadership team that we have built and the people that are coming to join, because they're coming with a vision to be part of this $1 billion vision. And we remain committed to really go on that journey as fast as we can and as steady as we can. But we don't have any planned activities that, will trigger more people. If people leave for their personal reasons, that sometimes happens. And then we work on transition and developing internal leadership to take on those roles. And top level has become at least a point where I believe that, now we will see more stability, because there's been a lot of changes, a lot of upgrades that we have done. So I'm personally optimistic that we will see a lot more stability at the top level.
Sure. I'll take that positive note. Thanks for answering. Thank you.
Thank you.
Thank you very much.
The next question is from the line of Bansi from JP Morgan. Please go ahead.
Yeah, hi. Thanks for taking my question. So 2 questions from my side. Firstly, Vivek, with all the ongoing buildup of talent that you've spoken about across functions, how should we think about the impact on overall cost structure and margins then?
Okay, what's the second question?
The second question is that in your, vision of achieving $1 billion, revenue milestone, we've highlighted that inorganic will also play a role. So in that light, if you could guide us as to any areas that you are prioritizing, any geographies that you are looking more closely to, build capacities or capabilities.
Okay, good. Thank you, Bansi. So I think yes, there is cost involved with the new people that are coming in. And there will be some overlap also, because when new people come in, all is there. So sometimes there will be a timing difference and some of these things. However, we are also very cautious of cost and looking at every single opportunity to optimize cost. We have some internal programs that we are running on Lean Six Sigma. We have a team that focuses on, we take very aggressive targets, looking at every single piece of cost everywhere. People cost is only a portion of the cost, but there are other areas where we have looked at. The guidance that we have given, we remain committed to that guidance. However, short-term, there could be, because of the overlap, there could be some minor impact that we are trying to make sure that we manage it in a smart way and looking at everything with ways of the cost. On the second question, in terms of the inorganic growth, we are aggressively committed. We actually have in-house M&A team of 2 people that is very experienced. We are aggressively looking at opportunities all the time. And as we are talking, there are some discussions going on. These are again focusing on our strategic direction that we said that we want to be a key CDMO player, looking at capabilities that allows us to become a niche tech player. And in that direction, we continue to look at opportunities that fit our strategy and that fit our vision. And as we make progress, you will hear more about it.
How should we think about, funding, some of these opportunities? Would they be large? Would they be, will you be able to manage them with your internal accruals?
Yeah. Listen, sometimes, opportunities are what they are. We don't create opportunities, right? We bet on what is out in the market. Our plan is to fund everything with internal funding. If required, we can borrow money, but right now we're looking at everything with internal funding right now. Idea is to remain, cash positive and then just leverage our, internal resources, and the kind of opportunities and the capital structure we are looking at, or equity structure, aligns with our vision that should be just with internal funding and minimize borrowing. Do it only if we have to, otherwise let's look at what we can do with our resources.
I'll supplement to what Vivek has said, that, as you would recollect, the vision is very clear that we will be cash positive at the end of the strategy period. Yes, as Vivek also mentioned, that, it all depends upon the size of the opportunity. We are neutral to using internal funding as well as a part loan if it were to be required in the interim period, and then we'll kind of stay to cash positive delivery at the end of the strategy period.
Got it. That's helpful.
Thank you.
Thank you. Our next question comes from the line of Harith Ahmed from Avendus Spark. Please go ahead.
Good evening, everyone. Thank you for the opportunity. On the resignation of Dr. Prasad Raju, which follows Dr. Sudhir Singh's resignation earlier. I'm just trying to understand if under our previous organization structure at the top, was there too much of an overlap in terms of executive roles and responsibilities, and was that a reason for this attrition at the top? If that was indeed a problem, then with these changes, how's the problem being addressed?
Harith, we explained, I don't know if you heard or not, we explained the new organization. We have three new CEOs who are running the business with complete authority and P&L accountability, responsibility, and commercial team. As you know, the organization has evolved, over a period of time, right? 6 companies coming together. It was really important to really relook at the organization and make sure it is geared for, our long-term vision of a billion-dollar company. That's why what you see is that we have 3 different CEOs who come with very unique global experience into this space, with the expertise in that space, and have complete authority, being supported by the head of operations, head of quality, head of supply chain, head of EHS, and all that to really help them. That's the main reason why you see the new structure change. There's no other reason why it was changed, or about overlap and all that. There was no such thought process that there was an overlap of responsibility. It is to align with the future growth of the organization.
Yeah. Got it. With your role as executive chairman, that continues, and will you be adding more designations or responsibilities to your current role, given the changes and exits?
I think, I'm not desire. I'm very busy with what I do right now. I have no other designation. Yes, I am continuing. I'm spending a lot more time in India. I'm here every other week. A lot of you guys have met me. That continue, and then it become very active actually. I'm excited that, I'll get to work with a lot of talented individuals. Yes, there's no change. I'm fully committed to the company and fully active in the role that I have. Now it's become a little bit more hands-on with these changes, I'll be more involved with the CEOs and other people reporting to.
Got it. Thanks for taking the question.
Thank you.
Thank you.
Ladies and gentlemen, you may press star and 1 if you wish to ask questions. Our next question comes from the line of Forum Parekh with Bank of Baroda Capital Market. Please go ahead.
Yeah. Thank you for the opportunity. I just have one question. Since we have mentioned about scouting opportunities in the M&A side, so I would like to know, I mean, if you can just share some color that are we looking to expand into existing modalities of ADC and oligonucleotide, or are we looking to expand into newer modalities? Because since in a very short span of time, we have transformed the entire business from small molecules to newer modalities. So are we looking to venture further into newer modalities, or we restrict to ADC and oligonucleotide?
Thank you. Thank you, Forum. And thank you for using the word transform, and I appreciate your appreciation of our transformation journey. So, no, listen, idea is to look for capabilities, not capacity. ADC, we have a East capability, we have a West capability. Oligo, we have a Eastern capability. If we find something in the West and oligo, we'll be happy. But we are looking at assets that are profitable, that bring unique capabilities to our portfolio.
Sure.
And they are all part of niche tech. It's something with niche capability. Sometimes, we have to buy a bundle, right? And in that bundle, you may get something that is not your first priority, but it comes with it, right? So it depends on the asset, but we are definitely looking for differentiated assets.
Okay, got it. Thank you.
Thank you. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to Ms. Cinderella Carvalho for closing comments. Over to you, ma'am.
Thank you, everyone, for joining us on a short notice. See you in the quarter 2 call. Thank you.
Thanks, everyone.
Thank you.
Thank you. On behalf of Cohance Lifesciences Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.